Today I'm going to show you some super simple yet super profitable trading strategies that will actually help you make your first $5,000 to $10,000 day trading in crypto. Not going to waste any more time and jump straight into the video. Smash the like and subscribe if you do enjoy. The first thing we need to focus on is what trading strategy are we actually going to employ? There's really two types of trading strategies where we're either looking for a trend reversal, where we're getting a major trend to the upside, but we believe the market has topped, and we actually look for a trade against the overall trend. And in comparison, we're either looking for a trend continuation as our secondary trade, where we're having multiple higher highs and higher lows. What I mean by that is we're getting a high, a higher low, and then price moves well above this high. We look for an entry on this secondary low for the continuation of the trend. And this is the main strategy that I will be focusing on in today's video. Next, I will actually be using some specific tools. Like here, you can see on my chart, I have the indicators known as the EMA, or also the exponential moving average. So you can actually come over to this indicators section, type in EMA, and simply add it to your chart. Here, we actually have the 200 EMA on this blue line. We then have the 50 EMA as this orange line, and the 20 EMA as the red line. And the differences between the 20, 50, and 200 EMA is this blue line. The 200 is using the last 200 bars of data to actually display this average price, whereas this 50 EMA is using the last 50 bars, and the 20 EMA is using the last 20 bars. What we're now looking for is a trend continuation pattern, where you can see right here, we have the 200 EMA, then followed by the 50 EMA above, and then also the 20 EMA above. So we're seeing that all three indicators have a positive slope and are all giving us the direction of a trend continuation. So this is the type of setup that we are looking for. In comparison, this right here is still a trend continuation pattern, but we do see we now have the 200 EMA followed by the 50, then followed by the 20, but they're all showing a negative slope, which is fine and just shows the trend continuation for this trade is actually looking for a downside or a short trade. When I'm trading crypto, I'm always trading perpetual contracts because that is the best way to get exposure to crypto. Here with BasePerp, they are true on-chain trading. Trade any token on Base directly from your wallet. Enjoy transparent pricing, fast confirmations, and complete control of your assets. 100% transparency as everything is visible on chain. Self-custody, so you don't need a deposit or third-party custody. It's powered by Base, so optimized for scalability and low fees. Instant settlement, no delays. It's really engineered for traders, designed for transparency, zero fee perpetuals. Trade and pay only when you win, so trade without upfront costs. Fees only apply to profitable positions. So here, liquidity pools, earn yields on your terms. Here you can even access top cryptocurrencies with leverage. It's an intuitive design, so it's available on mobile and also website. Plus, we can even see some crypto media news outlets actually exploring BasePerp. BasePerp is currently running their pre-sale. So once the pre-sale is finalized, the BPerp token will then be online, it will then be tradable, and it will then be the overall ecosystem behind BasePerp. We can even jump into the white paper to really understand every single aspect of the BasePerp project, how it works, all the security and safeguards, how the fee model works, risk management, market structure, all their different order execution and order types. Check out the link for BasePerp in this video description, and thanks to BasePerp for sponsoring this video. Now let me show you the first trading strategy that I use to employ in these crypto markets. So first, we'll be using this tool known as the Fibonacci retracement. This Fibonacci retracement tool, what it actually does, and what I'm focusing on, is here we use the Fibonacci at the beginning of the trend and we extend it all the way to the top of the trend. And what we're looking for, as I mentioned before, you'll see price have an initial reaction, a move to the upside. Price will come back at around this 50 to 618 region, which is actually known as the golden zone in this Fibonacci retracement tool. We then actually look for a trade, a trend continuation. So we look for an entry and look for that trend continuation. Now we can see here on this trade, the reason that I'm looking for a long on this trade is because we have all three exponential moving averages with a positive slope. So that tells me we only want to be looking for longs in the market. Now, after we have this initial low, this is where we have a really strong explosion to the upside. And what I'm now going to be doing is using the Fibonacci retracement tool from the beginning of the trend to the top of this short-term trend. And now we'll be looking for an entry at around that 50 to 618 level for the Fibonacci. So we can come down, grab the Fibonacci tool from the bottom, extend it all the way to the top of this trend, and we can see where did price enter. It entered perfectly between the 0.5 to 618 region, and then we got a continuation of the trend, just as it shows here. We're trading with the slope of the EMA. So not only do we continue the trend and look for that trend continuation, we're trading in the high probability zone, and we're also using this Fibonacci retracement to get our exact entries into the market. This first trading strategy works the exact same way if we were going to take a short. Here we have the beginning of a downtrend, and here we have the initial ending. So we use the Fibonacci retracement tool initially from the beginning, drag it all the way down to the end of the trend. And where do we see price having a major reaction? Right here at this 0.5 level. And we all have three exponential moving averages with the negative slope telling us that we need to be taking shorts. The third trading strategy that I employ is known as a fair value gap and is still a trend continuation strategy. Now, how I focus on this strategy is I'm looking for major trend bars in that initial direction of the trend. I'm going to focus in right here because we see we actually have 4 major bars actually getting this initial breakout. So we have this first initial trend bar, we then have this second major trend bar, this third major trend bar, and most importantly, this fourth bar right in here. What we're now focusing on is the fair value gap between the top of this second bar and the bottom of this fourth bar. Do you see how there's a major gap between this price? What it's actually signifying is there is a fair value gap. Price has moved extremely quickly through this area, and it's a highly common zone for price to then re-enter, retest that zone, ensure that the overall volume is trending with higher buy volume. So we actually accumulate all of the sell volume in this area. And what we now look for is the continuation of the trend. As we see, where is the trend? We've got the 200 EMA, 50 EMA, and 20 EMA, all showing us a positive slope, all telling me I only want to look for trades in one single direction. That's to the upside. So where am I looking for a trade? I'm actually looking right in between this fair value gap. And now what do we see? We do see price on this right-hand side, actually enter this fair value gap, we actually retest the 200 exponential moving average. We begin to make a higher low, we make a second higher low, and then we begin that trend following strategy where we are making higher high, higher low, and now we're continuing that trend. And see, as we move and continue on to the right-hand side, we actually got a major trade here, right in between this fair value gap. We got it near a perfect entry, and then we could look for a continuation back to this all-time high level. And this is actually when Bitcoin made its all-time high. So it was a fantastic trade. And what it really signified, what we noticed, is that price moved way too quickly, way too strongly through this area. We do need to retest between this fair value gap. Once we've retested, it's very, very likely to get that continuation of the trend. My third strategy focuses on finding absolute moonshots, waiting for huge breakouts, and continuing that trend as we actually saw quicker and higher than expected with any other strategy. Now, what this really focuses on, again, is always having the 250 and 20 exponential moving averages all in the same direction. And then what we're looking for is basically price will have a major breakout to the upside. What we'll see is price will begin to initially have a ceiling where it really is struggling to break out. We actually get this huge initial push, and now we have this sideways momentum where we're continuously basically knocking on this ceiling and we're unable to break above. My strategy here focuses on when you get this huge initial breakout, there's a high probability, if not the highest probability trade available. What will happen, especially if you get a trading scenario where you get 3 or even 4 knocks on this ceiling, price has a very high probability to retest this zone, ensure that this is the continuation of the trend, and then we get a huge breakout and volume really begins to come in. We've actually seen that exact strategy play out right here on the charts. We initially have the huge breakout to the upside, and price continuously is knocking at this area and is struggling to break above. But what happens once price initially breaks? We get this huge green candle. We don't get quite the perfect follow through. We do have a secondary red candle, but then this third candle is a major trend bullish push. We have all of the 3 EMAs in the correct direction, and where we now want to look for a trade is right in this zone is a high probability test. We've knocked on this ceiling 3 times. We got the major breakout. Now we look for a trade right in this high volume zone as price comes back to retest. Actually, multiple times, we nearly have 3 entry potentials. We could actually enter on this first candle. We had another candle basically 15 minutes later, and another candle even an hour later if we didn't see that trade. And then do you see the type of extension that you get? We actually moved in a super short amount of time. We had a major extension to the upside, and this trade was clear from the beginning once we saw this initial breakout, knock on the ceiling, and then the continuation. I also want to point out another example where this exact strategy worked, but we actually looked for a trend continuation, but to the short side. So we have all 3 EMAs with a negative slope. We only look for shorts in the market. One initial zone that we do see, look how we're continuously bouncing off of this zone. We actually do it twice, 3 times, 4 times, nearly 5 times before we get a breakout of this high volume zone. And by high volume zone, it means that there's constantly trades coming in this area. Look what happens. We get the huge breakout. We get that huge continuation of the trend. As we saw, the EMA tells us all the trends. And now look where price comes back to retest. Now, it's not an exact retest where we get the exact price point, but do you see how this area overall will act as a resistance, price comes back, retests the 50 EMA, retests this high volume zone, and then what happens? We get the continuation of that initial trend, of that initial breakout. These strategies work extremely well in quiet times and even extremely volatile times, only looking for that trend continuation. Don't forget to check out all the links in the video description. Don't forget to smash a like, subscribe, leave a comment, tap the notification bell, and I'll see you in the next video.